Good to have you back. What do you make of this market action today?
Yeah, I mean, it's definitely a strange market today, and I don't think you can expect this kind of a day, this intense of a rotation going forward. But I do think it's a taste of what's going to happen in the second half of the year. So, I think to understand the second half, you have to kind of go back to the beginning of the year. The beginning of the year, even the biggest bulls on the street were saying it was going to be a weak first half, and so then you get a strong first half. So when you have consensus that's under position for a strong first half and then a strong first half, that combination leads to a pretty powerful second half usually. So we've had 23 years where the first half of the year was up double digits, and 19 of those 23 years you end up with more gains in the second half of the year. So that's kind of what we're looking for. And then how are those gains going to manifest? We do think there's going to be a broadening of this rally. We talked about that before. The S&P made a new high on May 15th. It hasn't been confirmed by the S&P equal weighted. So the last new high in the S&P equal weight was back on March 28th. We wanted to see that new high confirmed within 90 days. So that's mid-August. Days like today bring us a lot closer to that.
And so you're tempted to want to believe in this?
Yeah, I am. There's parts, I think you need to be nuanced, though, about how you believe in this. And so, like, the small caps are the obvious big winners today, and it's been an area we've been recommending clients avoid all year. And so I still don't think you're in the right part of the cycle to chase small caps. So for us to play the broadening, we want to go to just outside of that mega cap tech, really. And so you want to go to still high quality. I do think, this is a tricky part of the cycle. It could be late cycle. So you don't want to play this like it's an early cycle environment and go into high beta, low quality, small cap type stuff. So you want to find that quality group that's right below Mag 7 that hasn't quite kept up with the market. And that's how we're positioned ourselves.
So what do you think the story is going to be after this earnings season wraps up, or the bulk of it? Is it going to be the same story, or are we going to be, starting to look beyond these mega cap tech stocks because their growth rates are just simply, it's impossible that they could possibly keep up what they've already done?
Yeah, so in my view, the narrative that's going to really start to take shape is that it is going to be that, number one, I think earnings are going to come through. We have a big earnings lift from the whole market, especially when you go out to Q4 of this year. I think that we're going to hit those earnings numbers. So that's number one. And I think that the narrative that's going to start taking shape and really driving the next leg of the bull market is this credit expansion narrative. So if you go back, we've had a pretty strong economy in a lot of ways over the last few years, but there are pockets that are really restrained by the Fed interest rate policy. So as we go in and we get new cuts, I think the first cut comes in September at the latest at this point, you start seeing, I think, a story open up where things that have been dormant, like existing home sales, which are back at 2009 levels, or new auto sales, which are still below 2018 levels, those areas of the economy, the durable goods segments, for instance, those reawaken, and the consumer borrowing takes the baton from this fiscal deficit-led expansion that we've been in. And so I think there are a lot of things that can go wrong with that as you play it forward into next year and stuff like that. But that's the narrative that we believe that the market's going to grab a hold of here in the second half.